Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Tuesday, June the 4th. The year's 2019. Let's talk trading. Buying certainty in an uncertain market. You really can't buy certainty, but that's what they're trying to sell you. When you think about it, somebody's trying to sell you a method, sell you an indicator, sell you an EA or trading robot, selling you this program, this course. What they're really keying into is that you feel that you need help. You can't do it right now. You need something that's outside of you. And because the market's uncertain, you just have a hard problem deciding if price is going up or down. And so they come along and they have these fancy indicators with all these lines, sometimes squiggly, wiggly, curvy, wavy. They come up with these theories, these huge books, these methods that have all these steps and big words like confluence and things that make sound reasonable like support and resistance, supply and demand. All this conceptual stuff. And somehow they convince you that if you part with your hard-earned money, that you can be successful. They're selling you this feeling. Oh, now I've got this indicator. Now I've got this. Oh, now I can trade. But, more often than not, people wind up disappointed. I mean, let's just be real here, right? So the next time you see one of those ads, either or you see some guy on YouTube or listen to some guy or some trader, could be a female trader for that matter, or even when you're watching my videos, you'll see an ad come up from somebody else and they're going to try and sell you on their method. And you just have to realize it's just like, look, I can't buy certainty. It's not going to happen. Because if you could, then there would be no market. Because who would trade it? Everybody would know what's going to happen next, so it would just go away. Because sooner or later, somebody would own it all if they were certain, right? Just, it's a logical conclusion. So that's why I've got this in yellow. Yellow means caution, warning, right? Maybe I should have put it in red. But the point is that when you're out there doing that, looking at various trading forums and what somebody's putting out on Twitter or on some trading blog or trading vlog or trading podcast, I mean, just take it all with a grain of salt. And just remember, on those videos, just like mine, for educational purposes only, and your results may differ from that of the speakers. Because, see, here, once again, you're losing. So you can put your risk in money management and you can certain of that. But the method, hey, maybe it works, maybe it doesn't. And then you work on your execution and performance. But you see with the methods, very few of them are going to give you statistical analysis. No, they're going to tell you about this back test and all this and all that. But they're not going to show you, how many times it didn't work. They're not going to show you what the frequency distribution is so you know what to really expect. They just don't. And that gets right back into your money and risk management. When you use those methods, anybody's method, your own, ones I show you, put your risk management in place. That means you have a stop loss in place every trade. Now, look at what we have here. All the gaps filled. They filled yesterday. We have an exit of this lower weak zone, and we're up 64 pips. Weekly wick zone. Now, I think I may have told you about that trade either Sunday or Monday. I think I probably told it Sunday night, look for it because, price was down. And we do this every week. And I stick with the one pair, but, you can run the statistical analysis on your pairs, the ones you like to trade, and then you too can take advantage of that statistical analysis. So I know price doesn't like staying in the wick zone, whether it's daily or weekly or monthly. Price just usually doesn't like staying in it unless it's really huge. And then, you can just look and see. It's like, well, wow, that's a huge wick. That's a huge wick. It's going to take a lot for price to get out of there. But sometimes it happens, sometimes it doesn't. But smaller wicks, like this one, relative to the candle body, yeah, price is going to expand right out of there. Just based on, your average range or the frequency distribution of the range. So once again, just, applying simple math and counting, count, subtract. That's it. None of these esoteric formulas with some fancy name like stochastics that most people, they couldn't derive it by hand. So if you don't know how to derive it by hand, why are you using a computer? I mean, some of this stuff just, when you really sit back and look at it, it just doesn't make sense. And they're out there just trying to separate you from your hard-earned money by getting you to buy certainty. Okay, month, week, day, we're up. You see here we open above the previous candle's midpoint, so we had a bias to the upside and we broke out of the previous day's high once again. Nice turnaround. See, here is the opening day's range for the week right here. There's the opening day. Actually, it's for the week and the month because they're both the same right now, since the week and the month opened on Monday. So you see here we're just a few pips above yesterday's high. And something nice to see, we're above the monthly open here. So we've got some green over here after what, 5 months of red. And you can see here we're above the opening range for June, right there. And we don't have an inside bar trade until we get back here, but right now that was 6 days ago, so it's almost going to be a moot point. And once again showing, got a range of 48. Yen's actually beating the euro. Yen is at 51, but notice anemic, nobody's over 100. Maybe that's because this week's NFP week on Friday, and I believe we got the ADP numbers coming out tomorrow. So maybe they'll pick things back up then. Should be fun, right? Looking at the holos, we just put in a highest open, so you're looking for a reversal off of the high. Now, once again, looking to the wicks, you see we're cutting across these wicks here. So does price make a new high or does it fall back below? So right here, actually, if you were long, this might be a point where you might want to start thinking about taking a profit. If you're looking for a trade, you might be looking for that reversal. Buy zone trade. Okay, you see here we had a short bias. It didn't quite touch the pivot point, so now we've got a missed pivot. And the long trades here off the buy zone. And you can see the weekly opens down here. So we've got a long bias based off the weekly open. It's above. We had a short bias on the pivot point. Rats, red rats, get ready. 48 pips of range. I think I have too many charts here. I'm going to have to pare these down. There's the monthly pivot. Now, remember, I think it was either yesterday or day before, I called the weekly pivot here, and as you can see, we hit it. I hope somebody took advantage of that. And you can see here, we missed the pivot today. And it looks like we're trying to take out this pivot next. Let's wait and see. Price action. No real signals here off of this 3-ball. Nothing was read at the line. So we just have to wait. So we talk about patience. So this might be one where you might rush the trade, but you see here, even when it got here, this hourly candle was still green. And the rule of thumb is you don't trade against the H1 candle color. Just wait for the hour to close and then take the trade. If you want to go short, let it be in your direction. Wick zone, in and out, in and out, in and out. Look at this. And right here you can see again off the previous day's high, a lot of price action there. Right now, only about 3 or 4 pips. Nothing much happening on the ticks, as you can see. Now, let me switch over here. Oh, wait a minute. There was somebody that wanted to see something. Right here on the Einstein line, as you can see, there's just not that much movement. So a couple of scratch trades at best. Sometimes you just stand aside. I'll show you something new I've been working on here for 2019. So I've talked about it having that opening day range. So you can see here over the last 100 bars, 76 times the price from Tuesday to Friday went above the Monday high or the first trading day of the week high. Sometimes the first trading day of the week be Tuesday. That's why I say first trading day of the week as opposed to Monday. So just trying to be a little accurate with the language. And you can see 68 times out of 100, from after the first trading day of the week, price went below the low. So that's not too bad. I mean, you can run these on other pairs, and these are part of the ooh, I just did something I didn't mean to do there. I accidentally hit something. One-click trading, I think. Let's see. So you can see here, these are a couple of TRO 2019 indicators. So this one will show you the first day of the week for however many weeks you want to go back. And so, point being is we're looking to see where price is in relation to these opening ranges. So you see 1 week ago, there's the opening range. 2 weeks ago, there's the opening range, and 3 weeks ago. So you just want to see where price is in relation to those ranges. So during the current week, look for it to go above, and 76 times out of last 100 above, 68 last 100 below. It's something that you could definitely trade and be profitable. But remember, these are educational purpose videos, and your results may differ from mine. So, see, I don't want to try and sell you certainty. I'm just saying, statistically, it's a good trade. That being said, fellow traders, remember, it's not what you trade, it's how you trade it. So, go out there and drain the banks.